Hey everyone! Welcome back to your weekly finance fix, where we break down the latest market trends, key economic news, and give you the insights you need to stay ahead of the curve. If you're looking to keep your money growing, or just curious about how the global economy is shaping up, you've come to the right place. So grab a coffee, sit tight, and let's jump right into this week's global market overview. First up, let's talk about the stock market. The global equity markets have been in a bit of a roller coaster ride lately. In the US, the S&P 500 has been climbing steadily, but with a few dips due to mixed earnings reports and concerns about interest rates. Meanwhile, in Europe, major indices have been holding their ground, although some countries are seeing slower recovery rates due to ongoing inflation challenges. And speaking of inflation, this continues to be the big story in 2024. Inflation rates in Europe and the US are still higher than central banks would like, but there are signs that the rate of increase is slowing down. The Federal Reserve is still expected to hold interest rates steady, which could either help boost markets or create some volatility, depending on how investors react. But here's the kicker. GDP reports are coming in. Economies are growing, but not as quickly as many hoped. The US economy grew by 2.5% last quarter, but Europe and Asia are facing slower expansion rates. Why? A combination of high energy prices, political instability, and slower demand from key industries. So while the global economy is expanding, it's definitely not a straight shot up. Let's zoom out and take a global perspective. In Asia, China's economy is showing mixed signals. Recovery is slower than expected, but key sectors like tech and green energy are picking up speed. Meanwhile, in emerging markets like India and Brazil, economic growth is still strong, despite some challenges like inflationary pressures and currency volatility. So what does all of this mean for you, the everyday investor? Well, with inflation still in the picture, your buying power is under pressure. But don't worry. There are strategies to ride out these ups and downs. For starters, look to diversify your portfolio. Stocks, bonds, real estate, and maybe even a bit of cryptocurrency. Don't put all your eggs in one basket. Here's a pro tip for this week. If you're looking to invest in stocks, pay attention to those that are resistant to inflation. Things like utilities, consumer staples, or big tech. They tend to hold steady when the market gets shaky. And, of course, keep an eye on those unemployment numbers. They're an early indicator of how healthy the economy really is. As we head into the holiday season, it's going to be interesting to see if the job market remains strong, or if those layoffs start hitting harder. All right, that wraps up this week's global market update. With a mixed economic outlook and some key reports coming in, it's crucial to stay informed. As always, remember that investing is a long game. The markets will go up, they'll go down, but staying educated and making smart strategic decisions is what keeps you ahead. Thanks for tuning in, and if you want to stay on top of the latest financial news, don't forget to like, subscribe, and hit that bell so you never miss an update. Got any questions or thoughts about today's market outlook? Drop them in the comments below. I'd love to hear your take. Until next time, keep investing smartly, and remember, the financial world moves fast. So stay ahead and stay informed.